All right, Saturday, January 14th, 2012. This is the first recording of this year, so I'm going to take a step back and look at the macro perspective and try and figure out where the money's flowing, where the trend is, and hopefully position ourselves to take advantage of that. Starting off here with the Euro weekly chart. Actually, let's push it back to a monthly real quick. Just want to see if we can establish the overall trend. So. Pretty much what we've been seeing on the euro, since it first started in 1990, kind of went sideways. The floor fell off for a little bit, and then in 2001 we had a very strong up move. And then since pretty much 07 onwards we've had choppy. But again, this is a monthly chart, so what's considered choppy on a monthly. Is between 157 to 120, so there's plenty of trade in there. But looking at it purely from a trending perspective, the trend isn't quite there. So, anyways, there's a lot of different ways people can look at this. Something that stands out to me is just this kind of this consolidation. Essentially, if we go ahead and drop in this upper trend line and then project to the bottom side, we get a decent channel. The bottom of that channel would be anywhere between the 120, the 110 to 120 range, and then this is an interesting level down here. We have this support, resistance, support down at the 108 range. So the reason I'm pointing these levels out is, if you notice here, this blue little box, and so if we go to a weekly chart, I'll explain that. So we're looking at a weekly chart now at the Euro USD. You can always see the time frame up here. Anyways, the reason I want to point this out again is if you look at this right here, one thing that really stands out to me is this potential head and shoulders pattern, right? So at this point I wouldn't call this a potential pattern anymore. It has confirmed. This green horizontal line right here was at the lowest point of the neckline, and last week, or rather the prior week, we were able to cleanly close below that level. So as a result, I took a short trade on the daily chart, and I'm looking for a 3-to-1 risk-to-reward ratio. So this target will have to be adjusted a little further to the downside, but that's the gist of it. So if we were to take the measured move from this high of this head to the neckline, the projected move is exactly what this blue rectangle here is, and that takes us down to 108. So that's the reason I'm pointing out 120 to 108. Again, this is a very large, longer term view, and there's a lot that can happen between now and then. Right? If the Eurozone problems are resolved, then we could easily see this thing, up to 140, and we'll be talking about a breakout at that point instead of a massive drop. But in the near term, that's a trade I've taken. On the daily, let's zoom in here. This is now a daily chart, and you can see right here on this day, when we came down here, we had a bounce off of support, and then when that level failed and we closed below, that was a great time to get a short entry and then put a nice, clean stop. Placement was right above the high of that day, because we know the best breakouts will continue, never really look back. Again, here you can see, this being the actual neckline. Thursday, Friday, we actually had a push back up into resistance, and then, as a retest of price, and then price continued down. Now, there's a few ways to trade this. Some people will generally wait for a retest, but again, the issue there is the best breakouts will generally break and never really look back. So, you run the risk of missing the trade, and then you kick yourself later saying, hey, I should have gotten in on that. But this way you might pay up a little bit, but you'll never really miss a trade. So, looking at that, that's just a perspective there. Because a lot of the stuff we look at is dollar based, a lot of these other currencies are showing a similar perspective. So if we go to the Euro US dollar and take it to a weekly chart, you can see we have a very similar set up through here. Here is your shoulder. Here's the head, and then here's the right shoulder. This week, late Friday, it was looking like a nice breakout. We were trading below the lowest point, but again, before the Friday close, buyers were able to push price back up above that level. So, no trade on this just yet, as it hasn't broken out or confirmed um, this pattern right here. On the daily, you can see we kind of have a doji to some extent, and then if you look at lower time frames, you can see we had a nice little reversal bar come in, and then some buying off of that. Moving to the Aussie US, similar story. This one is significantly stronger, because we do have the carry trade, in the direction of the Aussie. So you'll see, overall strength compared to the euro and the cable by default there. But one thing interesting here is on the weekly, we did actually have this swing point up here, price pushed down. As we pushed back up, we briefly broke the high here, stopped some people out, sucked in some buy stops, and then price closed back, in the range, essentially putting in a fake out. So a potential trade here would be simply to short this at this current level, put a stop above the high, and look for price to collapse here. This is one I'll have to think about a little bit more because some people might be looking for this upper trend line as a potential target. So that's one to I'm going to spend some more time looking into this and seeing if it's something I want to trade. Moving on to the CAD, this is dollar CAD weekly chart. Interesting picture here. We have a symmetrical triangle. Oftentimes, these tend to be continuation patterns, and so the trend coming into this triangle was to the upside, and we'd expect this to also break to the upside, continue on. Now, the issue here is that the overall trend, as you can see, since 2009, has been to the downside, and so it's tough to say which way this will break, but what we'll use is simply just price and using good risk management. Hopefully, we can catch a runner here. So pretty much price came down to this level, just below parity. We had a double bottom pattern, which had a roughly 450 to 500 pip target, and then if we extend that target from the breakout level, you can see that we managed to surpass that by quite a bit. Since then we've had consolidation, and then the week before last week we had this outside bar formation, and on the actual retest pullback there, I went ahead and took a long entry with a stop just below this pattern, looking for a breakout. So we are a little bit early here, but we are trading in the direction of the trend that entered this pattern and expecting continuation. So if we do see that, then we might add on a breakout here, and our first level of resistance, of meaningful resistance, will most likely be this high right here. If we manage to break that, we can use this blue rectangle as a guideline, which is a projected move from this high to this low, and you can see that puts us back up around 110 to 112, 110, 112 area. So one thing we can do is look for other areas of the chart where we've seen prior resistance and try and align our targets with those. So that's something that'll be an ongoing process really as news comes out, as different things change. The other thing we can do is we can use a Fibonacci, and so this would just kind of guide us in terms of how price is trading relative to the move down. So generally, when you have a down leg, price will generally not retrace more than 50%. If you do get more than 50%, the odds of the price continuing higher become exponential. So in this case, the target here is still under 50%, which means that the move could still be considered to the downside, and that wouldn't really be considered an upleg just yet in terms of the big picture. So, anyways, those are the four currencies that I've been looking at. That's it in terms of FX. Looking at the S&Ps now, S&P 500 5-year weekly chart. Interesting story here, head and shoulders pattern breakout. So this was from the roughly 1350s down to 1250, 100 points. So you can see that we actually managed to hit the target on that. Went a little bit past that, and price has been moving on up since then. So this was interesting consolidation here. Price managed to break out of that, and we've been trading higher since. The way price is reacting, if you look at a daily chart, the way price is reacting here at this high doesn't really indicate that we want to reverse just yet. Of course, that could change, but it seems like the market is still fairly strong. So this is our daily chart here. So a couple ways to look at this. Some people would say that because we managed to push back above the neckline, this pattern is broken. Other people would say if we actually manage to break this right shoulder, the pattern is broken. So in either case, you can see that this is not a textbook head and shoulders, because ideally you just want it to go. Which in this case it did. It did hit the target. So you're seeing buying now. Anyways, the point is, generally when you come into resistance, what you want to see is price dump. In this case, is not what we've seen. We've seen price holding up at the highs fairly well, and if that's the case, odds are we'll continue higher. We have a trend line here at 1310. If that gets taken out, then it's after the races really. So, interestingly enough, bullish on the S&Ps for now, and bearish on the euro. One thing we've seen recently is that correlation has come out of sync, and that gives us a lot more possibilities in terms of stock trading and also currency trading. Because before, no matter what you were trading, you were pretty much an FX trader. At this point, you can look at individual stocks and try to trade those separately and get different alphas on both portfolios. So one thing that I'm in right now, Bank of America, had a nice breakout right here, $6. Entered on the pullback here, been holding it. Price did come to $7. Maybe that would have been a good place to exit, but at this point, with my outlook on the S&Ps, I'm not overly worried about it. Stop is moved to break even. There's no risk on the trade, and if we do continue on higher, I'll look to exit around 7:30 or so. Walmart, another great pattern here. This is on a significantly larger time frame. Look at the weekly. You can see we have this resistance through here. We had a breakout on this candle. Took the entry on the retracement, put a stop low here, and looking for the price to continue on higher. If you look at the monthly chart on this, you get a similar idea of what's going on. You can see we actually had this hammer candle form on this trend line, indicating price reversal. Price broke out of this triangle right here, and we can use it as a target. So that target would be from 39 up to 59, so $20. The breakout was at, let's call it 55. So you're looking for 75 on the target. Right now trading at 59, 60, 50. So quite a ways to go there. So that's that trade, and that's pretty much it. On my analysis for the markets, and hopefully I'll be back hopefully next weekend with some new thoughts, and I'm pretty happy to see if our trades work out in our favor. Anyways, thanks for watching.